So we got 3 clues today. Those 3 clues we received today, inside day, right? We mark up our previous highs and our previous lows, and we were started inside the range from yesterday. We also knew we had a price wedge, right? Mark the highs, mark the lows, there's your price wedge. Price wedge tells me buy those lows, sell those highs, avoid the middle. If we break out, expect it to come back, right? Price wedge. And then the third thing was the crude oil inventories. Now, it's not a technical clue, but again, we know the crude inventories means I've got to be watching that alarm clock all morning long, making sure I don't overtrade the crude market this morning. And we had 3 news events that we had to kind of navigate through, and we also knew that we were going to get some big clues at 10:30 this morning. The way in which we made our money today was we saw price jump up to the highs of that wedge, and I tried to sell. I originally tried to sell the highs of the wedge. Remember what happened? The sellers failed. So we ended up buying into those highs after the failure, took one small loss, and then made the money right back. We then saw price go up at 10:30, come down, gave me a double bottom. And the double bottom was probably the biggest clue we got today. I'll show you guys that in a second. And the double bottom told me when price jumped back up, look to sell at resistance and bring it right back down. And we took 1, 2, 3 big winners there, selling the price right back down to that double bottom. We took our time this morning because at 7:30, 8:30, 9:30, we go through the US Open and price is just slopping around. And we find ourselves now 9:45, so my alarm goes off, right? Chicago PMI at 9:45 this morning. My alarm goes off at 9:40 and reminds me to wait until 9:50. So of course, by the time we get through 9:45 news, we go up, right? Higher high, pull back. Not quite ready yet. We go up, make a new higher high, and here we are now at the price wedge highs. Now remember, inside day and a price wedge tells me sell this high. So I am looking quickly here to sell those highs. And remember what happened this morning? What a great example here. Now, it was maybe want to pull my hair out, but it was a great example because we couldn't see any sellers. And what actually happened was we saw one seller, 4 buyers. One seller, 4 buyers, right? Big money buyers were far outweighing the sellers. And of course, I narrated it with you guys in the room this morning. It was a great example of how to read tape and how we originally looked to sell the highs here, but we never got the follow through. We never got the confirmation. And after a while, if we're seeing those 1, 2 sellers and then 10 buyers, after a while, momentum went oversold. And my exact words were, I'm not going to force this short trade. I'm oversold. I'm not seeing sellers. So the only other option is the wave long. And we had members saying, isn't that high risk? And yes, it is. So it's going to be a high risk wave pattern long. Now notice this is a picture perfect wave. There's my swing high. I break through. I pull back. We're above that swing high. Again, I'm not seeing the sellers. Momentum curls up from oversold and I jump in long. It goes up 5 ticks, fills my first target, plus 10, comes back down and bounces me out for a -3. So plus 5 times 2 is 10, -3 times 2 is, -2 times 2 is 4, and I get a +6 on the trade. A high risk trade, we knew it right off the bat, and this was very interesting because the buyers and the sellers, they were going at it at these highs, right? Buyers, sellers, sellers. It was a great example of how to read tape. We really did a great job seeing that lack of consistency that we always try to avoid.